Hi traders, Chris from the research team here at Pepperstone. Look, we've just seen the RBA statement dropping. We've seen the cash rate being cut by 25 basis points to 3.6%. That's not going to surprise anyone. Every economist had called for the cash rate cut. The swaps market had priced it at 100% implied probability. Of course, the RBA wanted to see a little bit more information from the July meeting, and they got that in the Q2 CPI print and obviously the labour market statistics where the unemployment rose to 4.3%. Now, of course, what we've seen across reaction in markets is a little bit of a dovish shift, very, very modest indeed. It's a pretty low impactful event. The Aussie dollar's dropped 15 pips to 65 cents on the dot. A few buyers coming back in. Front end government bonds dropped, if you look at 3-year government bonds, they dropped 4 basis points to 340, but again, finding a few sellers into 340. And you can see the ASX 200 has had a bit of a relief rally that's pushing all-time highs as we speak at the moment. If we have a look at the actual statement itself, it does read modestly cautious. The reaction function is still skewed towards more rate cuts. In fact, they're implying cash rate by the end of the year of 340, and then that's sort of expected to trough out at 2.9% at some stage later next year. They've talked about the idea that wages have come down, but productivity hasn't increased, and of course they're still very much data dependent. So what does this mean? Well, if we have a look at the September meeting in terms of market pricing at the moment, they're pricing 8 basis points of cuts for that meeting. That's probably going to be determined by the incoming data, and by that meeting we're going to get 2 more monthly CPI prints, we're going to get GDP number for the Q2, and we get 2 more jobs prints. So depending on the outcome there, we may get another cut, but the market's seeing that 1 in 3 chance. Probably the next situation is November, where that's fully priced for a cut there, and we go into next year, there's going to be another cut expected to play through. So of course the data now really depending on what happens, the market is seeing this as a bit of relief in terms of equities and very much data dependent, but we've got the cut. That shouldn't surprise anyone. Depends what happens with the Aussie dollar. Let me know how you're seeing things. Trade at Pepperstone.